Right, wrapping up the week on the economic front in the U.S. is the non-farm payrolls report due out at about this time. Now, will the job data align with the third quarter GDP numbers and outlook on the fourth quarter?
Well, that's what everyone here on the trading floor is certainly hoping for. You know, the DAX, if nothing negative happens this afternoon, will manage to end the week with a weekly gain of 2.5%. And for sure, this labor market data from the United States might provide a negative surprise. But if we look at what GDP has done in the United States during the third quarter, there is reason to be hopeful. Remember last week it was reported that the GDP, the gross domestic product, the growth rate of the U.S. economy in Q3, the third quarter, was much, much stronger than what economists had anticipated. So what the market here is pricing in at the moment is also that the labor market data, the jobs data from the United States underlines this, and that there's reason to be continuously optimistic about the U.S. economy. That's what's been priced in at the moment here on equity markets in Frankfurt, and that's a positive note that I, can end my reporting for you this week.
Thank you very much, Conrad. It's been a wonderful week with you, and enjoy the rest of the weekend. We'll move on now to the U.S., where stock index futures pointed to a slightly higher open on Friday as the all-important U.S. jobs data takes center stage. Looking to Friday's data, the main news that's expected to move market is that of the non-farm payrolls data due out before the opening bell. Investors will be turning their attention to non-farms unemployment rate figures and average hourly wages data, all of which will be published at 8:30 a.m. Eastern Time to try and get a sense of how the U.S. economy and the labor market are performing. Here is Jill Maladrino, VOA's Channels TV business correspondent in New York, with details on how the market has traded so far in the week.
While U.S. equities hover around all-time highs, stocks struggled for direction this week. The pattern has been to open strong, only to trade lower in the back half of the session, and we have not seen this type of trade in 8 months, according to Bloomberg, which led to short-term weakness at the time. There are several potential outliers contributing to this, including the reality of new tax reform inching closer, with bills passing in both the House and the Senate, but markets still awaiting a compromise between the House and the Senate on a few details, such as the AMT, tax rate, state and local tax provisions, and all that into the package before presenting the bill to President Trump. Next Wednesday, the Federal Reserve will deliver its rate hike decision with about 90% of the market pricing it in. And Friday is options expiration. And of course, there's the ongoing issues in Washington, D.C. surrounding the Trump administration and heightened geopolitical tensions. Outside of macro events, the calendar is relatively quiet until the fourth quarter year-end earnings kicks into high gear in the middle of January. And that will be the next fundamental catalyst traders will be looking for. The other major news dominating global financial headlines is cryptocurrency, Bitcoin in particular. And it's not just the wild price swings, it's also related to market structure. Now, market structure is crucial to global capital markets as we know it today because of their sheer complexity. Market structure is the impact of regulations, technology, innovation, and behavior changes on the market and its participants. Business models, methods of communication, security prices, and investment returns are all impacted by changes in market structure. So with that in mind, you can see why there's a concern in the marketplace since Bitcoin is not regulated and is decentralized. Outside of the volatility in Bitcoin in the world of cryptocurrency, which I would argue could be its own asset class, I think the concern around market structure will be driving headlines over the next several months. From New York, I'm Jill Malandrino, and this is VOA Channel's Business News.
And to Asia now, markets closed higher on Friday as markets digested better than expected China trade data and tracked the move higher in the dollar. The Nikkei 225 advanced 1.39%, rebounded after recording a near 2% fall in the middle of the week. Of note, Japan's third quarter GDP was revised upwards to 2.5% from the preliminary estimate of 1.4%. Across the Korean Strait, the Kospi edged up 0.08% to end at 2,646 as gains in heavyweight tech names offset losses seen in automakers and manufacturing plays. The Australian ASX 200 tacked on 0.28%. Greater China markets went higher in afternoon trade. Hong Kong's Hang Seng Index rose 1.32%. Tech was also one of the best performing sectors on the mainland, where consumer stocks also recorded gains. The Shanghai Composite tacked on 0.55% to close at 3,290, and the Shenzhen Composite advanced to 1.24%. And to other market news back here in Africa, Steinhoff International Holdings shares slumped 45% in Johannesburg on Friday after Moody's Investors Service slashed the global furniture and clothing retailers' credit rating by 4 notches to junk. The drop extends losses from a 7-day rout in the stock to 90%, wiping 213 billion rand off its market value. The yield on its 800 million euro bonds due January 2025 rose 17 basis points to yield 9.93%. Moody's cut the debt from 1 step above investment grade to 3 levels below on Thursday, placing it on review for further downgrades amid accounting irregularities that are preventing Steinhoff from publishing its latest earnings. The move comes as the South African regulator starts a probe, adding to a review by Johannesburg Stock Exchange and an investigation in Germany where it is listed. An Anglo-South African financial services firm, Old Mutual's UK Wealth Unit, has chosen Goldman Sachs, JP Morgan and Bank of America Merrill Lynch to lead its initial public offering next year. The Old Mutual Wealth flotation is one of several legs in the process of splitting parent Old Mutual into 4 parts. Before the listing, Old Mutual Wealth plans to sell its single strategy asset management division, Old Mutual Global Investors, led by veteran investor Richard Buxton. The IPO, which is taking place alongside a demerger of the unit in June 2018, would value the business at about £2.5 billion, assuming the Old Mutual Global Investors sale goes ahead. Old Mutual Wealth's pre-tax adjusted operating profit rose by 29% in the first half to £134 million. And Zimbabwe's new government has pledged to re-engage with international lenders, curb spending and attract investors in order to revive its battering economy. The measures will reduce the Southern African nation's fiscal deficit to 3.5% of gross domestic products next year from an estimated 9.4% in 2016. And after the break, Nigeria plans to support small and medium-scale miners. Details in a moment.